Family Credit Management is a non-profit credit counseling agency. We specialize in helping people take control of their debt.
People call in every day. By the end of the call, they're feeling better. They know there's some hope out there.
For over a decade, Family Credit Management has helped tens of thousands of Americans deal with the burden of debt.
If you're struggling with debt, the most important thing is to take control of it. Now's the time.
Hello, and welcome back to Family Credit Management's Half Hour. If this is your first time tuning in, my name is Laura Butler. I am a certified credit and housing counselor with Family Credit Management Services. We've been in the business helping people with all sorts of debt issues as far as debt management, budget counseling, credit counseling, and I'm here today to answer any questions that you might have regarding any sort of topic with credit. I'm also a housing counselor, so I can assist you with pre-purchase questions and also foreclosure prevention and reverse mortgage counseling questions. If you'd like to call in today, the number to reach me is 312-738-1060, and you're welcome to call in. If you decide that you don't want to call in and talk to me, live over the air, you're always welcome to call our offices, and that is 800-994-3328, and speak with one of our certified credit counselors. Over the last few weeks, we've been discussing lots of different topics regarding budget credit, counseling and how to get on track, setting goals. And last week I started talking to you guys about credit and how to build credit. I got, halfway through the presentation, and so I thought today I would do a little bit of a recap with the information that we talked about last week, as well as try to get through the end of the presentation so that way you guys can see a little bit more about, what a credit score is and the different pieces of how to build your credit. So we were talking about solving the mystery of your credit history. And over the last few, times that we were talking, I was talking about, what credit is used for, the different types of things that credit can be used for. A lot of times people think of it, for just buying things, and it's not always just buying stuff. As you can see on this, slide, it does show about relationships, employment opportunities. Perhaps you're, wanting to get new insurance. That's always going to, cost some money. So if you have a lower credit score, it's going to cost you even more money with your insurance rates, or you might even be denied getting an insurance opportunity. So these are just some things that credit is used for and why you should start building your credit. We talked about the differences between no credit and bad credit. Of course, no credit is, it's going to be more difficult for you to purchase a home or a car with no established credit. But bad credit is also going to be something that's going to be harder for you to be able to get new credit. Or if you do get approved for something, you're going to be most likely paying a lot higher interest. So it's always better, to have some sort of established built. You want to establish credit, but you also want to try to maintain it so that way it's not bad credit. And then we did talk a little bit about establishing credit and the ways that you can do that. Of course, you can do it with an unsecured credit card. That would be a card that you would open with a bank with no collateral. And then you could do a secured credit card where you would put down a deposit in order for you to be able to open that line of credit. So if you wanted a $500 line of credit, you would give them $500. They would secure that line of credit with that security deposit. And then it's kind of like a security deposit if you're thinking about like renting. So, it's kind of same sort of principle. But you're securing that line of credit. And then they'll give you the line of credit for $500. And then also the credit builder loan. So credit builder loan is something where you're opening an account with a participating lender. You make payments on it each month, and it helps to build your credit. So basically, they're giving you a loan. They're not giving you the cash up front. What they're doing is they're taking your deposit and putting it as the secured, like a lot of times they'll use a CD to secure that line of credit or the loan. And then what they'll do is the money that's sitting in that account is going to earn a little bit of interest while you're repaying them the money that they lent to you. So over that 12-month time frame, let's say, sometimes they can go to 18 months. They could be as little as 6 months. So, that entire time you're building your credit because you're making monthly payments, and at the end of it, they'll give you that entire line of credit or that lump sum of money that was sitting in that CD for you. So that builds your credit and also saves up a little bit of extra money for you as well. So that's what a credit builder loan is. And I would like to just also remind you guys to give me a call if you do have any questions. The number to call me is 312-738-1060. You're welcome to call in if you have questions on credit or if you have questions on anything else. You know, I am a certified credit and housing counselor, so you're always welcome to call me if you have questions on housing related questions, or if you just want to know how to build your credit, you know, ways to pull your credit. I'm going to go through a couple things through these slides as well, but if you have something specific, you're welcome to give me a call. So, we did talk about what a credit score was, and there's, you know, different types of credit scoring models that are out there. There's the 3-digit number used to determine your credit worthiness. That is what the basic definition of a credit score is. And as you can see, these are some of the main ones that are used, I would say, in the Midwest mostly, especially with the trans risk. But the FICO score and the Vantage score are used nationwide. You know, trans risk scores may be used with some establishments, you know, elsewhere too. But usually in the Midwest, the TransUnion is pulled more frequently. But the FICO score is the one that I really want you guys to focus on, and because that's the one that most lenders use. So for the FICO score, the range for that is anywhere between 300 to 850. The higher your credit score is, the better it will be for you to be able to get approved for things. You know, and I've seen it too where sometimes people, you know, think that they've got a great credit score or something like that, but they haven't pulled their credit in a long time. So it's really important to make sure you pull your credit and make sure that everything is good on the credit report, because there's a lot of identity theft out there. So you want to make sure that you're looking at your credit report, not necessarily your credit score every single time you pull your report, but you should go ahead and pull it at least once a year from all 3 credit reporting agencies to make sure that everything looks good. So where can you get your credit report? You can, if you're denied credit, you can always get, they usually will send you a letter in the mail stating that, you know, you are denied, and here's the address or phone number for the credit reporting agency or the establishment that we pulled it from. Sometimes it could be a third-party credit reporting agency. There are the 3 major credit reporting agencies, which are TransUnion, Experian, and Equifax. But, you know, sometimes they'll pull it from, you know, a lesser-known credit agency. You might see things on your credit report sometimes from different third-party organizations. So if they deny you credit, what they'll do is they'll send you something in the mail stating that you're entitled to see why they denied you. And so it's really important that if you are denied credit, you should definitely look at your credit report, because there could be something on there that you didn't know about. So you can always get it directly through the credit bureau. So again, that's TransUnion, Experian, and Equifax, and all of those are all .com. Or you can go to Annual Credit Report. AnnualCreditReport.com is the only free place to get your credit report once per year. Back in the Bush administration, you know, he did put into law that everyone's entitled to get one free credit report once a year from all 3 credit reporting agencies. So this is the phone number that you can call if you want to call. Let's say you're not comfortable in going online and doing it. They never ask for credit card information or debit card information, so you know, that's something that's good, that they don't ask for that type of information. So if you do go to a site and you think it's annualcreditreport.com, and let's say that, you know, they ask for a debit card or something like that, that's probably an indication that that's not annualcreditreport.com, so you want to maybe back out of that site and don't put any personal information on it. You know, Annual Credit Report, there's also, you can mail it in if you want to, if you prefer to do that. So, you know, that's definitely something that you can do. And just to give you guys the number again, if you do decide to call, the number to reach us is 312-738-1060. So if you do want to call in, if you have any questions regarding this, you're welcome to call me. And if it's not necessarily a topic, you know, that we're even discussing, if you've got something that is budget related or credit related or housing related, you're always welcome to give me a call, and I'd be happy to answer those questions. So, moving along, so the annualcreditreport.com is the website that you should go to, or like I said, if you wanted to write the information down, you're welcome to do that, or you can always call and request the information from me. Again, our company is Family Credit Management Services, and we can be reached at 800-994-3328, so you're welcome to call and talk to any of our credit counselors. They should be able to give you the annual credit report information as well. So now that you've got your report, what you're going to want to do is you're going to want to review the report for errors. That's the number one thing. So you're going to make sure that the accounts look good and, make sure that there's no fraudulent activity. I'm going to say, a lot of times people think, oh no, identity theft wouldn't happen to me. I know what all my accounts are, but you'd be surprised. Somebody stole my identity back when I was 18, 19 years old. I didn't look at my report until I was 21, 22. It's a long time for my report just to be kind of sitting out there, and my identity, was stolen during that time. So it's definitely important for you to check your credit report. Look at it once a year, even if you've got maybe not such great credit. The reason that you're looking at it is to protect yourself. And, even if you've got bad credit today, it's not always going to be bad. Whatever you put into it is what you're going to get out of it. So if you decide that you want to build your credit, you can do it. If you need the tools and the information, you can always talk to a housing counselor or credit counselor. If you're having problems with your mortgage, or if you're having problems with your credit cards, get on track. And, let's say you've never established credit, call a credit counselor. We can talk to you about ways to improve your credit. That's what we're here for. And of course, if you have questions, you're always welcome to call in today too. The number to reach me is 312-738-1060. So you also want to then begin an action plan to improve or maintain credit. So that's exactly what I was just talking about. Review the report for errors. If you see fraudulent activity, call a credit counselor and try to figure out what to do. If you've got items on your credit report that are negative, you definitely want to call in and talk to a credit counselor, because we can set you up on a payment plan if you want to do something like that. So you want to definitely, do something about it. So, don't just look at it and don't do anything about it. You want to move forward and make an action plan. So the items that should be listed on the report are pretty, basic. So of course it's going to have personal identifying information as far as your name history, work history, address history, and your telephone number. It's also going to have account information. So it'll have derogatory accounts, which are not so great accounts. It's going to be judgments, liens, collections. Those are all going to fall underneath the derogatory section. It's also going to have, if you filed bankruptcy, that'll be listed on your credit report as well. It'll have satisfactory accounts, so if you've got really good on-time monthly payments with your credit cards, your loans, your car loans, your mortgages, anything that you're making on-time monthly payments on will show up. Now, I do want to caution you, because there are some accounts that won't show up on your credit report. If you have payday loans, for instance, a lot of times they don't report to the credit reporting agencies. There are some credit agencies out there that won't report either. If you go to get a buy here, pay here car, for instance, you're thinking you're improving your credit, you're making on-time payments for this car loan, but it's actually not building your credit at all. You're just giving extra money to those lenders. So you want to make sure that, you are dealing with reputable lenders and reputable accounts, and so you want to make sure that it does report to the credit reporting agency. Otherwise, it defeats the purpose of having a loan. If you're, not building your credit with a loan, then, what I would suggest is try to save up the cash and just pay for it outright, because it's, going to cost you way less in the long run if you can afford to do that. So you also will show inquiries on there. Those are promotional ones, or only ones that you can see. And then there's hard inquiries. Promotional inquiries are also sometimes, if you call like a credit counseling agency and they decide to pull your credit, it's considered to be a soft pull, and that's what that promotional side is. Those are the things that only you would see on your credit. Hard inquiries is if you go to apply for a credit card, something like that. So what's not on the report? Things like race, gender, marital status, national origin, religion. It's not going to have your job, salary, title, those kind of things, but they will use that to determine the eligibility for a loan. So they might ask you for that information as you're going along. These are just a couple of sample of what a credit report looks like. Of course, this is, all blacked out because, I didn't want to show anybody's personal information. This is just the front page of an Equifax report. Same thing with this is TransUnion if you were deciding to go and pull it through yourself. So it's easy to read. As you can see, it's got information on there. A lot of times we'll have the account number blocked out or blacked out. You can't see the full thing, and that's to protect your identity. And then this is what some lenders will see. This looks a lot different. It's more hard to read or more difficult to read. And so, I just wanted to show you the difference. So when you go to a lender and you're pulling your credit, they may say that, okay, you're not going to be able to get a copy of this, and that's why. It's not something that's easy to read. It's only for the lenders to read. So, if you're worried or wondering why a lender won't give you a copy of your credit report, this is why. It doesn't look the same as it does for a consumer credit report. So that's what we covered last week, and then getting in today, I'm going to talk a little bit more about your credit score and how it's determined. So there's a few things that impact your credit score the most. Number one is payment history. That's 35% or so of your credit score. I cannot stress enough, when you get a credit card, making on-time monthly payments is extremely beneficial. If you decide that you can't afford to make a credit card payment, that is going to drop your credit score drastically. So especially if you've got a good credit score. So the higher your credit score is, and then if you miss a payment, and when I say miss a payment, I don't mean get a late fee. I'm talking about you being 30 days or more past due. So in order for it to show up on your credit report as a delinquent item, you have to be 30 or more days past due. If you're just a couple days late, chances are it won't show up on your credit report, but you're going to get a late fee. So you definitely don't want that to happen either. Late fees will start to add up. If you're close to your credit line, it's definitely going to hurt your credit score because a late fee could push you over that credit line, and then that's going to be really devastating for your credit score as well. So payment history is going to be number one. You want to make sure 35% of your score it consists of that. So besides that, credit utilization. And credit utilization is something that a lot of people don't realize. I made on-time monthly payments to my credit cards for years, but I didn't pay the balances down significantly. So they weren't maxed out. I wasn't, to the limit of my credit cards, but I had the balance that was on my credit card for a long time. So let's say you have a $1,000 credit line and you owe $500 on it, but you're not paying that balance down. You're staying at that $500. That does not improve your credit score. You want to make sure you pay it down, pay it off every so often, use it a little bit, and then pay it back down. The other thing that impacts credit utilization is the fact that if you have a credit card that's $1,000 and you owe $998 on it, that is really bad for your credit. Anytime you max out a card, if you go over 30% of your credit line, it starts to drag your score down. Years and years and years I made on-time monthly payments, but I did not get my balances paid down, and I could never get my credit score to go any higher. I was stuck in the 680s. I kept, and this is me being a credit counselor. I have credit card debt. I've had credit card debt. I've paid it off, paid it down, used it again. I'm a human. So, it happens to the best of us. So what I would suggest is try to stick at 30% or less of your credit card. So if you've got a $1,000 credit line, don't spend any more than $300 on it. The people who have the highest credit scores usually utilize only 10% of their credit line. So try to even stick even closer to that. That's going to be something that's really going to be beneficial. Of course, if you have any questions, you're welcome to call 312-738-1060. You can call and talk to me if you have any questions about credit or budgeting, anything like that. Just let us know. It looks like we do have a phone call, so I would be happy to go ahead and take that. Hello? Maybe? Not there? Hello?
Hi. So my question is this. I only have one credit card.
Uh-huh.
And I'm comfortable with one. One works well for me, but I've been told repeatedly that having multiple lines of credit is a great way to increase your score. So I wanted to know if I can maintain my good credit rating and just keep one card, or, must I open multiple lines in order to take the score to the next level?
Okay, that's a wonderful question. I would say that it depends on you, because if have you checked your credit score?
Yes.
Okay. So if you know what your credit score is and you feel comfortable that it's a good credit score, then I would say no, you don't need any more lines of credit. But typically when you pull your credit, and every time I do a credit report analysis with someone, basically what I'm looking at is, it'll say right on the credit report the things that are impacting. And a lot of times it'll say that either they don't have enough revolving lines of credit, or maybe they don't have installment credit either. So, in order to have a good credit score, you do have to have a mix of different types of credit. So that could be what people are talking about when they're referencing and saying you need more than one account. I would say that if you're using your credit card wisely, you're spending and you're not going over the credit limit, you don't need multiple credit cards. But I would say if you decided to open up any more, try to stick it, at maybe 2 cards or less. You don't really need any more than that to have good credit. I mean, you just need to, really focus on the credit that you do have, and then just make the payments on time and utilize the credit in a good way.
Okay.
Okay?
Thank you.
Thank you for calling. All right, so that was a great question, and that definitely goes into what I'm talking about today. So after credit utilization, it's your length of credit history. 15% of your credit score consists of your length of credit history. And this is another one that I want to really address, because for the longest time I thought if you had an account open, let's say since like 2000, it's a long time. That's 16 years you've had this account open. But you've opened up 3 or 4 accounts within the last 2 years. What they're doing is they're going to average your length of credit history. So it's not, oh, I've had this account open for 16 years, I've got a really long credit history. They're looking at the average total of all of your accounts. So that can actually drag your score down a little bit if you start applying for new lines of credit. Additionally, it does also the types of credit. That's exactly what our caller was just talking about. You want to make sure that you do have a mix of different types of credit. So, if she was thinking about opening something, maybe an installment loan might be something that will help to build your credit if you feel like your credit score is just not where it needs to be. A credit builder loan could maybe help you with that. Or, if you've got a mortgage, a car loan, those kind of things are different types of credit. And then, of course, new credit. So that would be inquiries. Every time you apply for credit cards, or, loans, cell phones, sometimes utilities, insurance, they're pulling your credit, and it impacts your credit score every single time they do that. So you want to make sure that you don't apply for lots of things all at the same time. Space them out over a few years. The new credit will actually stay on your credit report for 2 years. Negative accounts will stay on your credit report for 7 years. So this is something that will fall off after a while, but it does impact your credit score. And if you've got a good credit score and you keep applying for things and get denied, this could be one of the reasons why. So the ways that you can improve your credit score, and this is what I really want you guys to get the most out of this, is pay your bills on time and as agreed. Review your credit report at least once a year and correct any inaccurate information on the credit report. Make sure you're keeping your balances low on the credit card, so no more than 30% of your credit line. Don't apply for lots of new accounts all at once. And then when you do close accounts, make sure you carefully close them. Don't just close everything that has balances. You want to make sure that you're taking your time and not, going overboard. If you are in need of professional help, you can always seek a credit counseling agency. We can go ahead and pull your report. We can determine if a debt management plan is a good option. We can also help you create a budget and then advise on the best ways to build your credit from a personal level. So, just again, I just want to repeat, if you did have any questions, you can always call a credit counseling agency. Our number is 800-994-3328. You can talk to any of our counselors if you have questions. I am ending the broadcast today. I hope you guys all have a wonderful day. And if there is anything you guys need in the future, hopefully you'll feel free to give us a call. Thank you and have a great day.